Welcome to the Stage Analysis Members Weekend video. So this video is going to have a look at the major indexes, the industry groups, the industry group bell curve, before getting on to some of the major market breadth charts to have a look at what's going on with the weight of evidence, and then the watchlist stocks, and finishing off with a look at what's been going on with the major crypto coins as there's continued stage 4 declines and general carnage in the crypto markets at the moment. But obviously, starting off with the more regular content this week, so getting into the major indexes. So today I just wanted to start with a look at the year-to-date performance of some of the major indexes versus a few of the other areas such as gold and oil. A little bit of a relative comparison of what's been going on. We've been in a stage 4 decline for a while now. And you can see that we're, since the year to date, S&P 500 22.9% down. We've got 30.97% in the Nasdaq 100, similar in the Nasdaq composite, almost 18% in the NYSE, same in the Dow Jones, and minus 25 in the Russell 2000. So gold outperforming, up 0.66% year to date, and oil obviously the lead outperformer at 43.58% there since the close on the end of December last year. So it's this has started to come off in the last few weeks slow, so we might be starting to see a change of behavior in the oil stocks, which we're going to go through a little bit later in the industry group analysis. You can see here with the move down, we've dropped over 15-16% there in the last few weeks or so. So a bit of a change of behaviour going on in the oil, but you can see there's been a dramatic outperformance for oil versus the stock indexes year to date, with gold pretty flat, as we've had a few little pops up. It moved up just over 10%, but then dropped back down again. So pretty flat at the moment, but obviously relatively almost 30% better than the likes of the Nasdaq. So we get into the individual charts. The S&P 500 continued to make a further stage 4 decline this week with a continuation breakdown to new lows. There was a really large amount of breakdowns in the point and figure breakdowns. I noted it's the largest amount that I've seen for a very long while. I think there was almost 2,500 double bottom breakdowns this week versus only about 141 double top breakouts. So really skewed to the downside this week. So we generally see big numbers either at turning points or during points of acceleration. So we don't know which it is yet. But at the moment, we obviously had an initial acceleration down this week. So you can see percentage of S&P 500 stocks above their 20-day EMA at the bottom of the chart here hovered at really exceptionally low levels this week. It closed at 2.4%, and the vast majority of the week it stayed down at those low levels, which is fairly uncommon. You only see that during major stage 4 declines. We're now down almost 25% since the high in early January here. I think the S&P topped on January the 4th. And if we go to quickly flick through to the Nasdaq here, Nasdaq was back in November 19th, 22nd of November. And then the Russell 2000 was a little bit earlier than that, even on the 8th of November. So small caps topped out first before rolling into the growth stocks and then into the large caps at the start of the year, which obviously we know was having the most outperformance all the way through until more recently, when we finally started to see a little bit more outperformance with the small caps and the Nasdaq stocks in the near term. So potential minor change of behaviour going on, but we remain in a stage 4 decline quite convincingly, and a long way below key moving averages. S&P 500 here, for example, was still 12% below that 50-day and 20% below the 200-day moving average. So a lot of work for it to do to get back just to the averages. Looking on the weekly chart, you can see that stage 4 continuation breakdown from base 1 here. So this is our first base since the stage 4 breakdown. So we broke down more convincingly. It attempted to break down here but failed, and then we broke down more convincingly around this kind of area. So this is base number 1 breakdown in stage 4. as I highlighted on the feed this week, which upset a few Elliott wave people. There's been 5, obviously, moves down here. It's been, in terms of, yes, it's not correct Elliott wave. This put back up, moved back above the first wave move, etc. But it doesn't really matter. We're just highlighting the fact that we've had, obviously, this is the 3rd major leg down since the top. So whether it's correct or not doesn't really matter with that regard. It was just a way of highlighting the leg down that we're on, which means that we're getting later into the stage 4 decline, as you tend to get during a stage 2 advance or a stage 4 decline. The 5 waves tends to be where you start to move. Once you get past the 5th move or into the 5th move, you're getting into the later stages, and you could potentially start to move into stage 4B, even though we're still reasonably fairly early at the moment. So from an actual time perspective, so I wouldn't say it's stage 4B yet by any means, but generally once the 5th move down or the 3rd leg down ends and you start to pull back in again, then you tend to be much later in the stage 4 decline, as most stage 4 declines don't often make it past the first leg down, to be fair. So it's obviously a deep move that we're having at the moment, even though it doesn't look as dramatic as that 2020 move that came off in such a short period of time. But in terms of individual stocks, they've come off a long way. To quickly flick through a few of the other indexes, you can see NYSE continuing down in stage 4, Nasdaq continuing to make a lower low in stage 4 as well, Nasdaq 100 broken below the channel line and continuing lower, and Dow Industrials continuing lower there, and the Russell 2000 also the same. So exactly the same moves in all of the major indexes. As I said, a little bit of outperformance in the near term in the Russell here, but they're still making lower lows and making obviously higher lower highs. So downtrend, it continues to rule in stage 4. Nasdaq Composite here, exactly the same as the S&P 500 in terms of making a lower low. Little feeble rally attempt on Friday there, couldn't get back up very much. But Friday was a quadruple witching day, so it was options expiry for, I think it's 4 different types of futures contracts at the same time, which happens once a quarter. So there was a lot of pinning going on with stocks trying to cause the maximum pain. There's a decent website for that. I don't know enough about it to actually give you full details on how it all works, but basically it looks for you're looking for the amount where the options contracts on the puts and the calls are going to basically cost the people selling them the least amount of money. So it's the max pain level. You can find it on, I think it's maximum-pain.com is the website potentially, or just Google it. But it's a very useful tool and it's very interesting. You look at I think the Tesla one that I highlighted on Friday closed within 0.28 of the maximum pain level, for example. So exceptionally close, because I think the max pain level was at 650 and I think it closed at 650.58 on the day. So like shows the kind of manipulation that you see around the options expiry going on from the insiders and market makers, etc. So definitely something I want to find out a little bit more about and learn more about. So definitely worth having a look at the website, as it's a cool tool. Let's move on to the Russell 2000. Initially showed a little bit more relative strength as it didn't break down on Monday like the rest of the indexes, but did follow through on Thursday to make a lower low, and then held up on Friday again with the options expiry there. So we'll see if whether it can make a spring back through into the range on Monday, potentially form a spring here, or whether it starts to roll back over and move to lower lows. So at the moment remains in stage 4. Nasdaq 100, this is a 4-hour chart with an Ichimoku cloud on it that highlights the time-based resistance. So it's a good visual tool that you can use, as obviously the entire Ichimoku system is a really complex thing itself. There's like 8 books on it. It's a really big, complicated system, but you can use for a visual. A quick way to use it, which I tend to use on a weekly chart mostly, but you can use it on lower time frames as well. But for in terms of stage analysis, it's a good way of visualizing near-term support and resistance levels and the time-based aspect of it. So if you've had a deep decline, for example, it shows where potential zones of resistance can come in. So as we saw with the Nasdaq here, moved into the resistance zone and then it couldn't bust back out again. So when you actually, how I use it is I tend to only get interested when we're on the other side of the cloud on the short-term charts there. So you can see this period through March here where we got into a much more positive environment in the short term for stocks, and breakouts started working. And it was generally a happier time on the long side, but for the vast majority of this year to date, we've been under the short term cloud here, so under resistance, and obviously in a stage 4 decline. We move on to some commodity charts here. I talked about this one a few times in the recent weeks with the individual group charts showing some buying climaxes and obviously changes of behavior. We actually saw it with crude oil itself this week. So this is the light crude oil continuous contract chart. See the big significant reversal bar back into that original change of behavior bar, which it failed to make back up to the top again. So this often happens where you get a parabolic move like this and a heavy volume reversal tend to not make it all the way back to the top of that bar and tends to start to roll over there. So we've got a little bit of a short-term structure forming with inside and had a little local up thrust within and started to fall back into the range here. So breaking back down, and obviously this make a big impact on what's going on in oil itself. So we look at the inverse chart of oil. So if you want to make an inverse chart, just literally in stock charts, add a minus symbol in front of the chart. So it can be when you're looking at a chart in stage 3 or stage 4, it can be a good way of looking at the chart from a different perspective. As especially if you only trade on the long side, your eyes are more attuned to look for charts on the long side. So if you flip the chart, you can obviously get that same kind of behavior that they're looking for. So you can see our current base structure since the parabolic move into the high, which obviously the low here, and then it's formed this secondary structure within base here. So a little bit of spring type action, which is the up thrust that I highlighted, local up thrust, and has moved back above the 50-day moving average on Friday. Not convincingly, you could quite easily roll back under here again, start to roll back down to the downside again. It's still in a downtrend, it's still underneath this 200-day moving average, so it could still push to higher highs in terms of if we flip this back the other way. Back to the normal way. This could still obviously reverse back up. We're still in an uptrend, so it could still make higher highs. But you can see how that flipping that chart can give you a different aspect to look at. So, like I said, local up thrust within the range, starting to break down back through the 50-day moving average here, but not convincingly yet. Needs to start to see more closes below that. Potentially could see a test back down towards the 200-day moving average if that's the case. But if it can hold up in here, start to reverse back up again, then potentially we could see a test at back at the top of the range. But with the change of behavior we're seeing, potentially we could be on for a test of the 200-day moving average with that. Copper had a stage 4 breakdown attempt this week on Friday. Made the actual attempt on Friday there. Just couldn't manage to bust through that $4 level convincingly. So go back to the weekly chart here. I marked up a while ago, and I've shown this one quite a few times. Back to the original buying climax back in mid to early 2021 there. I think it was April 21 into automatic reaction. This is our change of behavior that highlights that you could potentially be moving into early stage 3, although at this point you still look like you're in stage 2 at that point. But you can see the difference with the pullback compared to these other moves within the stage 2 uptrend. So a much bigger move, but significant reversal bar within. So shows a potential change of behavior, and that's one way you can highlight potentially early that you're starting to move into a stage 3 range. And this is an area where when you're holding a stock or a commodity or whatever through your stage 2 advance, that it's an early exit sign. You want to then look for signs of it failing as it starts to run back up again. So at this point in here, and it starts to roll back over again, you start to move back below the moving averages, then this is your generally a early stage 3 kind of exit area. You want to start getting out, and then that helps you keep the majority of this, as obviously if you got in at stage 2, early stage 2 kind of areas. So at the moment, attempting to break down into stage 4 here, as I said, hasn't convincingly broke down yet. We've got it's at the bottom of the range in multiple areas of support that have been tested many times. So although it's made a stage 4 breakdown attempt, it's not convincing yet. So it could quite easily form a spring here and roll back in and push back up again. However, obviously with the breakdown attempt, the general weakness in the market, it could easily flush as well. We could see a sudden move lower, potentially make a more extreme stage 4 breakdown attempt. So we'll see what comes of that at the moment, but obviously it's at what we call a pivotal point where it could obviously go either way here, and so it's really a huge test of demand, as it's for them to prove themselves. And next up, iShares 7 to 10 year Treasury bond. So this is a ETF that tracks the 7 to 10 year Treasuries. So shorter term Treasuries, not the shortest, sort of a mid-term such. Broke down into the stage 4, which I highlighted at the time back in late 2020, then fell down quite strongly for a few months or so before rallying back up towards the resistance of the stage 4 breakdown again. But it was moved a long way back above the moving averages, so potentially turned back into stage 1 at this point, but it couldn't hold it, failed, rolled back over again, so made a stage 4 continuation breakdown, and then has been in stage 4 ever since. It broke back down again at the start of the year here. So deep moves, but at the moment, see, we had a little reversal move here. It gapped down on Monday, and then with that was the length of the gap. But then through the rest of the week, attempted to rally back up again and fill that gap. Did fill the gap, but it couldn't close back above, obviously, the prior week's low. So a little bit of a outside reversal move here, but with a demand tail. So we'll see if this can make a continuation back up a little bit, back into the near term moving averages. A long way to go to the 30-week moving average low. Still, in terms of this, 8% is a long way for the Treasuries. They don't make those kind of moves very often. So, but you can see relative strength versus the S&P 500 just starting to improve here. So potential reversal signal, selling climax type move. You can see it was on stronger volume as well. So we'll see what comes of that one too. And then gold. So this one's got this is the continuous contract chart. I haven't shown this one for a while. I tend to show the ETF on this one that's marked up. So this one's the actual continuous contract. It gives you obviously the better technical analysis perspective of it, as it's got the full day's price actions. And so if we take this back in time a little bit, let's take it back 5 years, for example, you can see the entire stage 2 advance that it had through 2019 and 20, and then that pullback move into stage 3 that's then dived quickly into an early stage 4 move there. So this trend line had multiple touches, so that's why I've highlighted that. So if we go back into the more close-up chart here, the 2-year 9-month chart that I use, you can see that trend line then becomes resistance on the upside. So we did have a stage 2 breakout attempt here. So attempted to move back out into stage 2 here, but immediately run into that long-term trend line there and failed with a supply tail near the high of the range and rolled back over again. So formed a little bit of an up thrust and test pattern at the top of this stage 1 base sort of structure that we're in. So we moved out of stage 1 into potential stage 2. So failed stage 2 breakout attempt and back into the range. So potentially this could now be a broader stage 3 top. It could completely roll over. This could all be a massive top structure, or at the moment, obviously, if we take it down into the more minor structures, you've got your stage 2. We had a stage 3 move into here, had a quick move into stage 4, but it held support at that demand line from the long-term demand line there, which then reversed it back up into the range again. and started to chop around moving averages, which started to flatten out and cross over above and below each other. So turn that into a stage 1, out into an early stage 2 move, failed and rolled back over again. So potentially we could still be back in stage 1, and it could attempt to further break out again. We've got RS outperformance versus the S&P 500 here, as I highlighted at the start of the video with gold. It's around 0.6% year to date, I think it was. So it's pretty flat year to date compared to the stock market that's down 20 to 30%. So outperformance in terms of it's, even though it's gone nowhere, you haven't lost any money in gold since the start of the year, whereas obviously stocks have lost 20 to 30% in general. So it's definitely been a solid outperformer, but nothing like oil, which, as we saw, had been up over 40, 50% or so. Right, let's move on.